Did you buy the dip? Did you nibble a little bit late Friday, maybe this morning? Well, it's not new, right? Although I will say, you can see here that little red spot there after the sort of COVID thing, 2020, retail investors, they took greater control of their financial future, and they've been buying a dip ever since. I mean, golly, have they been buying a dip. And, of course, whenever you hear this is the end, well, now it seems like it's a no-brainer because everyone's buying a dip, although it didn't maybe feel that way on Friday. Now, the fact of the matter is it's worked like a charm since that 2009 bottom, and my next guest is looking into three areas of the market right now where people may be considering. I want to bring in Resonate Wealth Partners, their Chief Investment Officer, Alex Guiliano. And let's just start, obviously, we have to start with the big tech. All right, you got to start with technology stocks. In general, broadly, what's your thinking?
Yeah, Charles. So, obviously with the market action we've had on Friday and the rebound today, investors aren't necessarily abandoning the AI story, but they are reassessing what prices they're willing to pay and what areas of the AI trade that they want to play in. So, for example, if you're looking at the chip players especially, right, you have their greatest potential upside, but also the fragility seems to be there where investors are concerned that this may be another type of cyclical name, COVID supercharged earnings type of effect where there may be a long-term decline. And that fragility has caused some of the spooking on Friday. But you've seen that rebound kind of come back pretty quickly. Right. And so it really just demonstrates that the upside is still there, but there is some fragility there.
So Marvell, I mentioned earlier in the show, on Friday, down 17%, one of the biggest shellackings a semiconductor stock has taken in years, and yet it was the number 2 stock of the week, right? So, I mean, let's admit this, these names can pull back a lot, not even be near the 200 or 50-day moving average.
Absolutely. And so from an investor perspective, you need to be comfortable riding that wave, right, and being comfortable that these names may have the most upside, but the possibility that you do get a major decline is part of the trade, right? If you want to get the upside, you have to take into account that possibility.
And of course, you tell people that, and they say, no problem, no problem. What the hell was that? But I will tell you this. I will say this. For me, retail investors have gotten so much smarter. So, when the market crashed, the dot-com bubble, my business was in trouble for 3 years. I almost went out of business. Then the great financial crisis, we were sideways. When that COVID hit, everyone wanted to buy the dip. Everyone. And ever since then, they've been buying a dip. I guess you do that until it stops working?
Yeah, you have to take a long-term approach to the market, right? And so I see pessimism typically as a handicap. And so when you're trying to buy the dip over the long term, investors really want to ride on the resilience of America and the ability to take a look at what the overall story is in the market. And while the chips names seem like they're a crowded trade at the moment, and that's why you have that fragility, the possibility that you have more upside is really still driving the story. So
I just had Mark Newton on. He likes software over semis. We had a chart of software versus semis, and it's looking like this. On its own, you can see it's made an admirable rebound. What are you saying about software right now?
Yeah, I really view software as one of the most overlooked AI trades you can make, right? And so when investors are looking to buy the dip, typically the names that you have some major upside in feel painful to buy when you buy them, right? And you've kind of seen that in the price action, obviously, in software names. But the big thing with software names, I think investors are really underappreciating the relationships and the data that these software names have with big companies. And the ability to funnel in the AI, it's easier to have a new feature with AI on existing software rather than to funnel AI through an organization.
Then they say, I'm going to get rid of Salesforce.com, this big, robust system for my 50,000 employees, and we're going to use ChatGPT. That's just not going to happen, right?
And so is AI a disruptor or potentially a complement to these software names? And
we're hearing that more. We heard that from some earnings, and you can see that from this strong rebound that more and more people believe it. Before I let you go, another part of your key nuts was financials. Financials, I mean, they came out the gate this year. Last year, they rallied into the year. Everyone seems to like financials. The big banks seem to be doing okay. And then you look around, and they're really underperforming. What's going on?
Yeah, I think you hit the nail on the head that there's really an opportunity there, Charles, right? The sentiment around them feels fine, but the trading action hasn't been there. And you're really betting on America's resilience and the continuation of corporate earnings. You don't need euphoria for financials to do well, and you don't necessarily need the AI trade to do well for financials to do well. And so by making a bet on financials, you're giving yourself the opportunity to ride the sweet spot we have here with a potential resolution in Iran, the continuation of corporate earnings, and the filtering in of AI throughout corporate America.
So, Alex, before I let you go, that Friday's jobs report and the revisions were huge, huge, huge. Are you in the school that says, hey, that's not necessarily good because the Fed's going to have to slow the economy down? Or are you in the school, I'm in this school that says, hey, it's a great economy, it's a good backdrop for the stock market ultimately?
Yeah, I'm in the camp you are, Charles. I think the biggest thing right now is the Fed, to watch what somebody does, not what they say necessarily. And the Fed right now is continuing to just say that they're not going to raise rates and they're going to stay the course. And the new data hasn't really changed that mentality.
Right.
And so this is really a great backdrop, especially for financials in this rate environment, to continue to do well.
Good stuff, Alex. Thanks a lot. I really appreciate it.
Thank you, Charles.
All right, folks. My next guest has posed a question that the world's hottest